Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 31st of May 2021. Alright everyone, before we get into it, I wanted to just give a quick shout here that I was on the Rockstars of Ethereum kind of podcast here with the EPNS co-founders, two of them here, husband and wife duo. So if you want to go listen to this and go check this out, I'll link it in the YouTube description. We had a wide-ranging discussion from, talking about my background in the industry and like what I did beforehand and kind of like what I'm most focused on today. And it was cool. The interview format was different to what I'm used to. There was at the end, there was like a lightning round of questions, and the questions were actually quite fun to answer. So definitely go check that one out if you've got some time. And on, I guess, like that note, there's going to be an Ethereum Foundation Eth2 AMA on June 23rd at 1 p.m. UTC on the Ethereum subreddit. So mark your calendars for that. The last time they did this, I think, was a little while ago. There's been multiple kind of AMAs here over the years, but these are usually really, really awesome. They're packed full of information about Eth2 directly from the kind of research and kind of like development team as well. So definitely going to be kind of checking that out. I don't even know what time 1 p.m. UTC is for me. I think it's around this time or something like that. Maybe around midnight or something. But I'll definitely be checking that out. I think there's going to be a ton of information in there that you may not see anywhere else, or maybe just very, buried or whatever. So they usually post the thread before they kind of answer questions so that people can kind of put questions forward. And I guess speaking of AMAs, there was the Daily Gwei AMA over the weekend, and it went for about just over 2 hours this time. So it's a great showing there. But if you missed it and weren't able to attend, the recap is uploaded to YouTube, so you can go check that out under the AMA series kind of playlist there. They will happen every 2 weeks, I think, from now on, unless I have kind of scheduling issues or something like that, and at the same time, which is Saturday night my time, 11 p.m. Australian Eastern Standard Time, early morning US, and kind of, I guess, like afternoon-ish Europe there. So if you can make it, definitely look forward to the next one in a couple weeks there. All right, so on to the news from over the weekend. We had Arbitrum's devnet finally go live. Remember, I had been talking about this kind of all of last week, and we've finally seen it go live here. And they're calling it Arbitrum One, which is their mainnet beta for developers. And in the post, they go into details about kind of like everything that's that this mainnet kind of beta comes with, what it comes with for developers. They had over 250 teams request access for this launch, and they only put the blog post out, I think. What was it, back on May 13th, so only a couple of weeks ago now, where they asked teams to kind of submit via a Google form, and they had over 250 teams already submit applications. So you can see that, I guess, scaling, people are hungry for scaling, even though gas prices have been down lately. I don't think that people kind of think to themselves, well, gas prices are low now, why do we need layer 2 scaling? It's more like, okay, well, gas prices are down for now, but what happens when, I guess like the network gets more usage again, when the market heats up again, and that's what's going to happen. Like, it's not going to stay like this forever. There's going to be more usage that comes along, the market's going to get hot again, and it's all just going to be, I can see Gwei or gas prices going back to 100 plus for kind of rapid transactions there. So that's why the hunger is here for things like Arbitrum. And they said in this kind of post here that they're actually going to be hopefully opening this up to the public in maybe a couple of weeks. I think they said that somewhere in this post here, or at least they definitely kind of aiming for sometime this month, hopefully, if not kind of like not this month, sometime in June, if not July. And they also detailed how that it's not fully decentralized yet. They're still going to have guardrails on Arbitrum because it's mainnet beta. They don't want something bad happening or something catastrophic happening that they can't recover from. So there's going to be admin keys and all that sort of stuff there. But I think that's fine. I think there's kind of guarded launches and these slower launches are absolutely fine. I have no issue with that myself. So yeah, but still very, very cool to see that this has gone live here. I think, there were some people who were expecting this to be more than just like a devnet. They were kind of expecting it to be something that users could use, and that's coming in the next few weeks. But I think in this industry, we tend to have a kind of like problem with the narratives getting away from us. And I kind of wrote a little bit about this in the newsletter today, where you can't win a narrative war. Whatever people want to believe, they're going to believe. The best you can do is just like talk through the tech. So the tech really is the ultimate kind of arbiter of what's true and what's not. So, people can say, oh, well, layer 2s are never going live. And then when they go live, people can't really say that anymore. And if they do, they become like this kind of fringe minority where people say to them, well, layer 2s are live. What are you talking about? And they're laughed at and they're mocked for that. But before these things go live, you can, of course, you can get these people saying, well, this isn't going to happen, that's not going to happen, blah, blah, blah. We had this happen with DeFi. When DeFi was very young, there were a lot of kind of haters out there who would say, oh, DeFi is never going to work, it's all just like a scam, it's built on kind of like shaky foundations, and now DeFi is as big as it is, and those people, some of those people are still saying that, but they're not listened to anymore. Like, no one listens to them anymore, except like the most ardent and hardcore kind of like haters or detractors from this technology. It's the same thing with everything that's gone on with Ethereum over the years. Layer 2, the Eth2 proof of stake rollout, sharding. Until it happens, people can always make up whatever narrative they want and believe whatever they want. But then once the tech's out there and the tech's speaking for itself, it's just very hard for people to kind of ignore that, or at least most people to kind of ignore that and double down on that, unless they want to be like, called out for it sort of thing, or maybe they just want to create their own echo chamber or whatever. But anyway, still very, very exciting launch from Arbitrum here. I am looking forward to the public launch because obviously that is going to be the place where we all get to play with layer 2 and finally get to experience, one of these kind of like optimistic rollups that we've been hearing about for quite a while now. Not to say that you can't experience kind of like ZK rollups already, which is kind of like similar through Loopring and Diversify and all that good stuff there, but I think optimistic rollups typically have, the optimism is really just synthetics right now, which hasn't got much going on, and the ZK rollups aren't generalized. So Arbitrum, I think, will be the first generalized, open to the public kind of mainnet for like EVM compatible kind of apps here. So, and the fact that over 250 teams have already signed up to jump on board here is a huge vote of confidence. I'm assuming that like every kind of major DeFi app is going to be on there, or at least most of them are going to be on there. And as I've mentioned before, because capital is so easy to move in this ecosystem, you could have capital really quickly flow to Arbitrum, and Arbitrum could get some nice network effects very quickly from this. So I'm definitely looking forward to that. And on that note, 0x Mackie from SushiSwap announced that they've deployed to Arbitrum already, and they're doing just UI polishing and things like that. And I think MCV2 is loading. I'm not sure what this is. Maybe I'm being dumb here and missing the obvious. But anyway, they've already deployed, which is really, really awesome. And they're just polishing up the UI. Now, the reason why it's so easy to deploy for these existing projects is because it's Arbitrum promises just like a one-to-one port over from Ethereum mainnet because they're fully EVM compatible. They have their own kind of like I think virtual machine called the AVM, the Arbitrum virtual machine, but it's 100% compatible with the EVM as far as I know on the tech side of things. So that's why you'll see a lot of these apps that you know and love from Ethereum going live and everything like that. And there won't be forks. There won't be like BSC where there's kind of like forks happening that, PancakeSwap copying Uniswap, Venus copying the money markets on Ethereum. These are going to be the protocols love and trust on Ethereum, just on Arbitrum with, very cheap transactions and very fast transactions as well. And you've already seen kind of like this play out with Polygon, right? Like Polygon has a number of top Ethereum apps on there, and there aren't really any of these kind of like scam forks that we saw on kind of BSC as well. So that's really positive to kind of view here. But yeah, the days I think of people having to deal with high gas fees on layer 1 Ethereum are numbered. As I've said plenty of times, I think that sooner rather than later, people are going to be experiencing layer 2, and they're not going to have any reason to go back to layer 1 here. They're going to be bridging between different layer 2s. I mean, I showed last week how Hot Protocol already has like a bridge between Polygon and Ethereum that only takes 1 minute and 30 seconds. And I think the way they achieve this is they have basically a cross-chain decentralized exchange or a cross kind of L2 decentralized exchange where they have market makers that sit in the middle and take on that withdrawal kind of delay for you, but for a fee, of course. So there's going to be tons of these solutions going live, and I mean, it's the era is like, I mean, I know I've talked about layer 2 so much, but it's finally here. It's finally going to be getting these network effects and kind of like getting people to experience it, which I think is the main point. At the end of the day, things can be live in developer mainnets. These things can be live for developers to build on, but users are not. Most users aren't developers, so they're only going to care about it if they can use it, which they will be able to soon. So I'm looking forward to using all my favorite apps on Ethereum layer 1, on kind of like rollups like Arbitrum. Of course, I've been using them on Polygon as well, and that's been really awesome too. So I'm just really looking forward to using it across all these kind of solutions here. So Justin Drake put out a kind of update today on his kind of, I guess you could call it ultrasound money chart here, where he basically charts like how much ETH will be burned under EIP 1559, and does that track to a deflationary ETH. Now, the really interesting thing here is that the fee volume for yesterday is a 6-month low. So it's the lowest it's been in 6 months. It was 2,645 ETH, which I think is $4 million or something like that. Or maybe, is it $4 million? Or maybe more than that. Maybe I'm doing my math wrong in my head. I think it's more than that. I think it's more like $40 million or something like that. I actually don't know right now. 1,000 times 2,500 would be, okay. It'd be 4.5 million or something like that. Or about 5 million. I'm not going to try and do my head math right now. I've probably butchered that. But anyway, it still was a 6-month low, right? Because we've seen days of like $20-30 million of fees happening on the network. But the current proof of stake issuance is only 1,000 ETH per day, which means that we still have comfortable deflation even with only a 50% fee burn. So if only we've burned 50% of kind of like that number there, we would still have a comfortable deflation. Now, it's expected that we'll probably burn up to 70% of the fees, and the rest going to miners and eventually stakers. So this is really cool to see that even in a lower fee environment, we're still getting this kind of deflation that we expect. And the meme that like we're burning more ETH than we're issuing is still alive and well. And, you know, I don't expect, as I said before, I don't expect layer 1 fees to stay this low for very long, honestly. I think it's just a function of, you know, a bunch of different things, right? The market calmed down and cooled down a lot. People are moving to kind of like scalability solutions like Polygon. We're going to have more people moving to layer 2s. But I think what's going to end up happening, and I actually went through this on the AMA series, but I said that eventually layer 1 is just going to become a chain where rollups secure itself. So if you have enough rollup transactions on layer 1, they're comfortable paying the higher fees. You're going to get to a point where the layer 1 fees are going to be high, but they're not going to be something that the end users are paying. It's just going to be what the layer 2s are paying and what whales are paying. The end users like me or you, we're going to be sitting at layer 2 and enjoying the kind of like, cheaper and faster transactions up there. We're still going to be able to get the deflationary ETH that everyone wants as well. And, you know, during times of like really high volatility and really high gas prices, we're going to be just burning even more ETH. So, you know, the next time we have like a dog token mania, that's not just going to be something that we all have to painfully deal with. What's going to end up happening is that, you know, hopefully a lot of us will be on layer 2. We won't even feel that. Like, we won't even feel the high fees. But what will end up happening is that the layer 2 kind of operators will be paying to put their rollups on Ethereum. And in doing so, they're paying the high fees. And they don't mind because they're kind of like, I guess, aggregating a lot of transactions together and earning the kind of fees that way. But like we still get the benefit as ETH holders of ETH being burned. So how amazing is that? It's like we don't have to feel the pain of high fees, but we still get to feel the benefits of high fees. I actually haven't thought of that before. In like an ideal world, in the world that we're all working towards, we will be able to get the benefits without the pain. Because for a while, after 1559 is released, I think, you know, it's still going to take a while for people to go to layer 2 because 1559 is coming in July. And all that sort of stuff there. So I think, once that kind of rolls out, we probably still will have to deal with the higher fees, but they'll be less painful because we'll be like, oh, well, at least ETH is getting burned here. But then once we're all at layer 2, we'll be like, wow, I get to hold ETH. You know, I get to stake ETH, I get to kind of like get, the benefit of ETH being burnt, and I don't have to deal with the pain of the high fees. That's awesome. And that's what I call something like a symbiotic relationship, where the network is really working for all of the users and kind of like working for the holders of ETH as well, which I think is very important. So, and on that note, with EIP 1559, there was an all-core devs call that wrapped up. I think it was like Friday morning. It's usually Friday night my time, but Friday morning last week, they spoke a lot about 1559 and how an issue was found by one of the core developers, Martin Swede here. Or Swende, I don't know how to say his surname. Sorry about that, Martin. But essentially, he found a critical bug within 1559 that could essentially, I won't go through the technical details, but it could lead to a chain split, I believe. So obviously that is not good, but they're going to be able to fix that bug. But due to this, it might lead to a kind of like delay of 1 to 2 weeks from July 14th for 1559. Now, in saying that, I don't think delay is the right word here because there was never a like hard date. July 14th was a tentative date, and every time I spoke about it, I said it was tentatively scheduled, and then I always kind of caveated that by saying, if there is a bug, especially if there's a critical bug, the date can be pushed back because for security reasons. And that's exactly what's happened here. Now, I don't think we know whether this is going to be 1 to 2 weeks. It depends on how fast all the core developers can kind of get this fixed and how comfortable they are with it and everything like that once the tests are all done. So we may see it just by the end of July. But it's still coming, right? It's not going to be delayed by that much, but again, delay is probably the wrong word here, and I think based on the kind of like narratives as well, I don't know how many people actually realize that July 14th was a tentative date, and I think there's going to be a lot of people who are shocked to learn that it has been kind of like pushed back to the end of July. I'm sure a lot of you maybe didn't even hear about that because unless you read this thread or kind of saw this thread here or kind of like paid attention to the core devs call, you wouldn't have known this. So I think just generally, it's not something to worry about. I don't think it's going to affect the price of ETH or anything like that. The markets are nowhere near that efficient. And I just think that, there might be some FUD from people being like, 1559 got delayed, because apparently there's 1559 haters out there these days, as I explained last week. But I do think that it is like a slight delay, and who really cares? I mean, we've waited this long for it. What's another couple of weeks, right? So we'll see it sooner rather than later. But yeah, just be prepared for at least a 1 to 2 week, maybe, a low chance, but maybe even longer than that. Maybe it pushes into August. But as I've described before, we need to hard fork because of the ice age, which basically bricks the chain eventually. So we need to do it in August the latest. So from that point of view, I kind of like see 1559 not getting delayed very much because of that as well. But it'll be in sooner rather than later, as I said. So interesting tweet here from Hayden Adams, who was comparing, I guess, the volumes of Uniswap to Coinbase across different pairs. So you can see here that the USDC ETH pair on Uniswap, V2 and V3, has almost $800 million of volume. Coinbase only has $60 million of volume. And I assume this is over the last 24 hours, which is pretty funny because USDC is Coinbase's product, or at least they're part of the consortium that manages USDC. So to see that Uniswap is kind of like not just beating them, but like slaughtering them on volumes here is quite amazing. At least on the ETH pair. Like I'm sure like Coinbase on other pairs probably have more here, but or more volume here. But even on the ETH BTC pair, Uniswap's winning with WBTC against ETH by about double, and ETH USDT Uniswap also is winning by a bit less than double here. Now, this is really awesome because of the fact that, as you can see in the comments here, Harry asked how many full-time employees does Uniswap currently have, and it's only 22 people. and the funny thing is that Uniswap, as it currently exists, V2 and V3, doesn't require the Uniswap team to maintain it. It's already live and working. There is no, there is no maintenance needed for it. It could continue forever with literally no one touching it. So you could say that the Uniswap protocol has 0 employees because it doesn't. Uniswap doesn't technically employ anyone in the protocol. I mean, there are the Uni token holders who act as governors, but generally, if the governors did nothing, Uniswap V2 and V3 even V1 would continue into perpetuity and still keep growing. I think. I think that V3 is such a beautiful and elegant design that people are still tinkering with, but I think V2 is still amazing for a lot of passive LPs who don't want to deal with the kind of like the concentrated liquidity aspect. So from that point of view, I think Coinbase has over like 1,000 employees, and I think a lot of them are both in customer support and compliance and regulatory and legal stuff. Whereas Uniswap doesn't do any of that. The customer support for for Uniswap is like the Discord channel. There is no kind of like notion of customer support for a lot of these apps, which I think is there's good and bad aspects to it, of course. I think Uniswap obviously isn't a fiat on ramp as well, so there's a lot of compliance stuff that comes with that. Uniswap, the protocol doesn't hold, you can trade non-custodially with Uniswap, and the Uniswap protocol doesn't have an admin key or anything, so there's no custodial risk, there's no kind of money manager risk, there's no legal kind of like, the protocol doesn't need to obtain money transmitter licenses or anything like that. So from that point of view, the legal and regulatory and kind of like compliance overhead is just like non-existent. So this is, just a broader point here. This is why DeFi wins, because think about how, I guess, like inefficient and how much kind of baggage there is in these kind of like centralized companies. Because at the end of the day, and this is something that Eric Connor, my co-founder of ETH Hub, told me a long time ago, is that the reason why there's a lot of regulations around things like banks and financial institutions in general, is because they usually custody the assets for people. So to make sure that they don't do the wrong thing with customer deposits and to make sure they keep it safe, they have to be regulated, right? And regulated very strictly, and they need to do compliance stuff. They need to do KYC, AML, all that sort of stuff. DeFi doesn't need to do that. Like if you're a truly decentralized protocol, and you don't need to do that. And especially because it's non-custodial, where users hold their assets in their own wallet, be that a hardware wallet or MetaMask or wherever, right? So it's all the same thing from the Ethereum network's point of view. But from that point of view, it means that there's no KYC and AML because it doesn't need to be. There's no kind of compliance here. There's no legal and regulatory here for the protocols themselves because they aren't managing users' assets. The people don't have direct control over users' assets. Now, you could say that some of the protocols that have admin keys do have control over users' assets, and sure, that's fine to argue. But I would say that the truly decentralized kind of protocols like Uniswap, basically, will never come under scrutiny because the government's going to take one look at it, or any government is going to take one look at Uniswap and be like, go to the Uniswap team and be like, hey, can you do something here? Can you do compliance on this? Can you do KYC? And the Uniswap team can be like, well, no, we can't because it's truly decentralized, and basically explain to these regulators why that's the case. There's no admin key, there's no control, it's literally autonomous code. And I think, there are going to be some regulators that understand that. There are going to be some that act dumb about it. There are going to be some that try to push back on it. But at the end of the day, the technology speaks for itself. There is literally nothing the Uniswap team or anyone can do for that matter to kind of control the Uniswap protocol. Absolutely nothing. And the Uni token holders, if they want to do something to the protocol, they're a diverse bunch of people all around the world. And if you wanted to actually change it yourself, like as a regulator, you would have to purchase Uni tokens or convince the people with Uni tokens to delegate to you, which just wouldn't happen, I don't think. Because a lot of the people in this industry, especially the ones involved in governance, really don't like centralized governments or nation states or regulators telling them what to do. So yeah, a bit of a tangent there, but I think it's something interesting to think about when you kind of think about DeFi's advantage. And there are many advantages, but I think this is the key one. The kind of like self-custody of your own assets means that a lot of this regulatory stuff just goes out the window. You don't need to do any of this stuff. You don't need to do KYC, AML, and all that good stuff. So yeah, but still cool to see Uniswap beating Coinbase on volumes. That's what we want. We want a decentralized future. Not to say that Coinbase doesn't serve its role, but I've said in the past, centralized exchanges are going to be relegated to fiat on-ramps, I believe. Once, Ethereum scales more and we get kind of more people on board with centralized exchanges, these centralized parties are going to be, actually, they're going to be two things. They're going to be fiat on-ramps, and they're also going to be maybe three things, actually. Okay. Fiat on-ramps, layer 2 on-ramps, and also they're going to tap into DeFi protocols as like a front end. So I can see that happening too. But yeah, I'll leave it at that for now. I think generally, I've spoken about this before, but it's just something to keep in mind is why DeFi has such a major advantage over its centralized counterparts. So the block, or at least Frank Chaparo from the block, announced that Circle, the company behind USDC, has raised $450 million in a new funding round with participation from Fidelity, Valor Capital, DCG, and a bunch of others here. So the valuation target is $4 billion, and this comes as no surprise to me. Circle, with their USDC product, is absolutely killing it. I'm sure you've all seen USDC's kind of supply going up a lot. I think USDC is viewed as like a safe version of Tether because there's a lot of people who don't want to hold Tether because of the risks. I know it got significantly de-risked recently with a bunch of the cases being closed against them, and they're doing more transparency reports now and things like that. But I think still people are like iffy about it. Like I personally, if I want to use a centralized stablecoin, I'm not going to use USDT, I'm going to use USDC. And that's, I think, a major reason why it's been growing so much. The market cap of USDC, it's obviously been used within DeFi a lot as well, and it's become like the centralized stablecoin of choice within DeFi, I think, from what I've seen at least, rather than USDT. I think that's a lot to do with the risk reasons as well here. But yeah, this is a massive fundraise, obviously. And you can see, so Frank Chaparo put out a kind of like tweet with USDC's market cap here. You can see it's at like 22 billion here, which is absolutely massive. I think USDT is bigger than it, but USDC is definitely second place here. And the growth has been absolutely explosive. Look at this. May 2020, it was at like, $1 billion or something like that. So $22 billion about a year later, that's 22x growth on kind of this stablecoin. And it's just literally just going up, like just mooning as hard as you can see here. This is a linear chart, of course, but still really cool to see that. And congrats to Circle for this raise here. And in other news about raises, SetLabs, my old employer, has raised a $14 million Series A, which I am incredibly excited and proud for. This was led by 1KX and Hashed Capital here, with participation from a bunch of DeFi native investors like Defiance Capital, Mechanism Capital, Spartan Group, and a bunch of others, and also a bunch of angels as well. Now, disclaimer here, I participated in this round, obviously, because I am so bullish on Set. I'm still an advisor to Set as well, so... And you can see here, a lot of familiar names as well participated in this round, which is really cool to see. This is going to give the team a lot of runway. I'm really excited to see what they build out here. They've got a bunch of killer products right now. They've got the DPI, the DeFi Pulse Index, the Flies, the Index Co-op, the whole kind of thing going on there. They've got a bunch of people managing their own funds using Set's infrastructure, kind of like a bit of social trading going on. It's really, really cool to kind of see that there. So yeah, I'm really excited to see that Set was able to raise this money here to continue building out what they've been trying to build out for a while now. I mean, Set is one of the earliest DeFi projects. I think they 2017, I think, end of 2017 at a hackathon it was born, and then early 2018 they raised some money and have been building ever since. And they've been building since, I guess, like DeFi wasn't even a thing. One of the co-founders, NJ, actually was part of the original cohort that came up with the decentralized finance term, the term DeFi. There's actually a screenshot floating around that I've posted before on Twitter. So yeah, they're definitely one of the oldest that have been building for quite a while. One of the biggest, it's one of the biggest these days as well, with Index Co-op and a bunch of other things they've been doing along with treasury management and stuff like that. And of course, like with this capital, they're going to continue, on their mission to decentralizing their protocol and furthering community ownership and things like that. I think you can read between the lines there. I don't have any special knowledge here, even though I'm close to the team. But as I've said plenty of times in the past, decentralizing the protocol usually comes with the token. So maybe that happens, at some point in the future. But I think they're one of the only Set is one of the only DeFi protocols left that hasn't issued a token yet. I think DYDX and a couple of others out there, like Dharma. I don't know if Dharma's going to do one. I suspect they will, but DYDX is definitely going to do one. I mean, it's kind of like stupid to think that they wouldn't do one. But yeah, I think that's really cool there. And they're going to be building it on Index Co-op as well, and doing more kind of stuff like L2 and kind of stuff like that. So yeah, congrats again to Set here on the raise. Very happy to have been part of it. Obviously very happy to still be an advisor to the team and watching them grow as time goes on here. So Fiskantes put out this really interesting meme that I thought I just wanted to talk to for a little bit here. So basically the meme is like for those of you listening to the podcast, the meme is like the buff Doge on the left. And at the top, it's got 2013 to 2019 crypto investors. And then underneath it, it's got diamond handed through MT Gox, the DAO hack, Bitcoin block size wars, countless China FUD. And then on the right side, it's got like the sad Doge with at the top, it's got 2021 crypto investors. And it says, I don't like this price dump based on generic China FUD. I am in 97% in fiat. Fundamentals are all reflexive, and I am tired of triple-digit yields. We are going down. Now, the reason why I found this really funny is because it speaks to my experience especially during the bear market 2018, 2019. People would complain, of course, that the price was doing whatever, but there are a lot of people who kind of like survived and kept kind of adding during that period. I'm obviously one of them that, weren't kind of saying this stuff. Like, I don't remember ever saying kind of things like that I've been seeing over the last 2 weeks after this crash. Like, people are really just saying some stupid stuff. Like, I think what ended up happening was that people got really maybe used to the gains and kind of like they kind of went to their head and they kind of thought to themselves, well, it's all over now. That was too easy. It's all gone. I mean, what's all gone? Like, the fundamentals haven't changed at all. Like, the yields are still high. Like, yes, the yields come down because prices come down, but the yields in general are still very high compared to, if you're comparing it to traditional finance, they're much higher than that. And what, like, I just really want to know and meet these people and kind of ask them, what do you think has changed in the last 2 weeks? The price is halved. Okay, cool. Now tell me what changed fundamentally. Did the Ethereum network stop working? No. Did DeFi stop working and growing? No. DeFi actually handled the crash very, very well. It was an amazing test of DeFi. Has adoption slowed down? No. I mean, this is in the context of Ethereum. Maybe for other things it did. Maybe for the casino coins have washed out a lot of that. That's actually healthy. Maybe the leverage what got washed out, again, healthy. But has any of the, like, all those fundamental drivers that we always look at, all the things that I go over in the Daily Gwei Data Pump series, where I go over the on-chain fundamentals and things like that, nothing's changed there. People are still building. People are still raising money to build. I mean, I am so busy still. Like, I mean, most of the weekend I was like pretty quiet on Twitter because I was just so busy going through so much stuff happening within the industry. I'm getting to a point where I can't even keep up anymore. And you know, the funny thing is, this is exactly what happened in 18 and 19 as well, where there was a bear market, but the amount of building going on was insane. Like, people were building like crazy, and the fruits of that building through the bear market kind of reared their head in 2020 and kind of came into it in 2020, because without all that building, we wouldn't have had DeFi summer. Like, I'm telling you that right now. Without the core building blocks like stable coins that were deployed during the bear market, especially something like DAI, without the decentralized exchanges like Uniswap, there would never have been anything like a DeFi summer. Ethereum as a network would have probably been relegated to still being considered like just useless, and you know, people kind of like you know, hating all over it, and the ETH price probably would have been in a really crappy place. And then, you know, you look at the layer 2 stuff happening. I mean, I just spoke about how Arbitrum went live on Friday. That hasn't stopped. The layer 2 rollout hasn't stopped. Polygon is doing so much amazing work on the scaling front. I mean, they released their SDK last week. All the kind of like work on the core protocol hasn't stopped, you know, on ETH1 and ETH2. I mean, as I just said, there's going to be an Eth2 AMA. They're going to go through a bunch of stuff there. There was an update from last week from Danny Ryan, one of his quick updates, going through what's happening with the merge. Nothing fundamentally has changed. So why are people just complaining like this? Like, I get it. I understand it. They might be new. They might not know what this is like. They might be scared. They might have bought the top. I understand that. But really, when you're in these kind of markets, you need to make a decision, I think, when you enter these markets. Are you a long-term investor, or are you a short-term investor? And are you in it for the tech, or are you here just to make money? If you're here just to make money, well, losing money is part of the game. You're not always going to make money on every trade you do. But if you're here to make money and you're in it for the tech, but you want to do it over the long term, well, this industry is going to be very kind to you. You look at the long term for Ethereum from 2015 to now. I mean, if you had bought in any of those kind of like years, besides buying it maybe over the last month, if you had bought any other time, you would be up on your investment. And that's just ETH. You had plenty of opportunities to invest in other things like DeFi and kind of like L2 stuff and scaling stuff. I mean, I looked at the Matic price the other day. I was like, the historical price of Matic, it was like 2 cents or like lower than that for such a long time, and it went up to like $2.60 at its peak. I think at the moment it's like almost $2 again. But when you look at that sort of stuff, all of these opportunities were available in the bear market. And if you had taken hold of them and kind of like taken the opportunity and seized the opportunity, you'd be doing very well right now. But also from the technology side of things, you know, do you want to work in this industry? Well, if you want to work in this industry, there's always people hiring, no matter if it's a bear or bull. I mean, yes, there was less positions open in the bear market because there was less money going around, but I joined a set in mid-2019. You know, DeFi back then, as I've explained, you know, numerous times on the Refuel, was like a niche within a niche within a niche. It was so small. These teams did not have, you know, more than maybe a year runway, and that was, you know, most of the DeFi teams out there. It was very hard to get funding for DeFi. But these days, you know, people still have, you know, a lot of money. There's still a lot of money in this ecosystem. There's still a lot of people hiring. I mean, so many people hiring. I've had so many teams ask me for people lately and things like that across like all types of roles. And, you know, just generally, if you're looking for a job, you can go to cryptocurrencyjobs.co. It's a website. They've got a lot of great kind of like jobs on there as well. But yeah, I guess like that's how I kind of view this, is like if you're new to the industry, stop focusing so much on the price. I know it feels good to make money. Like, I'm not going to say that it doesn't feel good to make money, but if you actually are in it for the tech and you're here for the long term, then the short term swings or even medium term swings shouldn't really affect you unless you're over invested. If you put all your money in and now you're down a lot and you know you needed that money for something, well, I mean, it's a different story. But if you're slowly putting money in, trying to be a long term investor, trying to, you know, create a nest egg for yourself, then don't worry about the short-term moves. I truly believe that over the long term, ETH is just going to go up forever because it's been designed to go up forever as long as Ethereum, the network, you know, has usage and kind of like maybe even remains number one, which I strongly believe it will. But I think there's more chance that ETH goes up forever than it goes down forever. Like, much more chance. I mean, what am I even saying? I don't think ETH's going to go down forever at all. Like, there's no, just the way these kind of things work. I think that the ETH, I mean, it went to like a $500 billion cap or more at peak. When I think about all of that, I'm just like, it already went there, and we haven't even, gotten to the point where we have like mass adoption yet. Like, can you imagine what happens with mass adoption? Like, you know what? I would actually be sympathetic towards you being bearish if Ethereum had already taken over the world, if Ethereum was already in everyone's kind of like lives, and maybe the growth potential wasn't as big. But the growth potential from here, I'm not even kidding, is still another 10,000, plus times across every metric, because we haven't even scratched the surface of adoption yet. I'd explained this last week. There are less than 1 million people who have touched DeFi before. And, when you kind of like think about that in the context of the total population of the world, which is the total addressable market of DeFi, it's 0.013% or something like that. So yeah, we still got a long way to go here. Do not become one of those people who get disenfranchised over the short term, exit the ecosystem, and then come back 2 years later and regret not sticking around. I did that. I'm speaking from personal experience. I was into Bitcoin in 2013. I kind of bought some there. I didn't have much money, so I bought a little bit. Then when the price crashed, I was like, oh, well, the party's over, whatever. Sold my Bitcoin. I missed Ethereum by a month. 1 month. And by missed Ethereum, I mean investing in the ICO by just 1 month. Then I didn't look at crypto again till early 2017. Yes, I got to buy some ETH like really early on, in 2017 at a really nice price. But if I had just hung around for even just a month longer, I'm not going to say I would have 100%, but there would have been like a pretty strong chance that I would have been able to invest in the ETH ICO. So take it from me, you do not want that regret. Like, I've been trying to come back from that for a while. Like, I got over it a while ago, but it took me a little while to get there, because I was like, wow, if I had just stuck around, it would have been better off. And that's actually a major reason why I stuck around during the last bear market. One, because like Ethereum just like had me, hooked on it. I was obsessed with it, but I also had flashbacks to when I kind of stepped away and how bad that was, for me, both like, I guess like from a money point of view and a social point of view, and like a kind of my career as well, because obviously I made my career at Ethereum now. So yeah, if you're the kind of person who like wants to stick around for the long term and really sees the potential here, don't be kind of like swayed by this short term movement. Just stick around, and this ecosystem will be kind to you as long as you don't overtrade too and don't play with leverage. I always suggest against that. But again, none of that is investment advice. That's just my general thoughts on kind of like how the market works, how kind of like ecosystem works, and whether you should be feeling bullish or bearish doesn't really matter in the long term. I think long term is always bullish, and I'm a permabull, so of course I'm going to say that. But you should all be permabulls at this stage in kind of like the adoption cycle of this technology. I'll leave it at that for now. So thank you everyone again for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.